All right, Spartak, I'm excited to dive in with you today. Can you give me a little background on what you're up to as the founder CEO of PayEngine? What is PayEngine trying to do in the world?
Yeah, thank you, Mike. Thank you, first and foremost for having me on your podcast and doing this. Really excited to be here. At PayEngine, we've been building payments, white label payment systems for vertical software companies. Vertical software companies are companies that are specifically focused on industries. Some of the names you may have heard out there are, Service Titan or Shop Monkey or MindBody, where they specifically target vertical small businesses typically. And we help them offer payment solutions to their own customers. So it allows them to monetize from their payment stream as well as enhance their offerings and cater better to their customer networks, because typically for any small businesses accepting payments is table stakes at this point. So we help them basically white label their own solutions.
So an example of that would be MindBody. You go to MindBody and say, "Hey, we want to." You're not replacing their existing payment options. You're adding to it, or how would it technically work?
Yeah, so typically a MindBody, we wouldn't replace MindBody's own payment system, but MindBody typically, let's say, caters to small gyms or yoga studios. So as a matter of example, let's say you have a yoga studio and you're currently accepting payments. And when a MindBody-like software comes to market, MindBody effectively becomes your operating system of your small gym, where it's, another way put it, it's kind of a glorified CRM system where it really manages all your memberships and whatnot. So this allows a MindBody-like company to now also offer payment solutions to the small gyms, where the small gyms, rather than going out and signing up via Stripe or Square or other disparate payment systems, which at the end of the day, that data is only meaningful once they import it into the MindBody software so they can understand their churn rates, customers, whatnot. Now MindBody is able to step up and be its own payments provider to you. So with our technology, we make companies like MindBody or Service Titan or a Shop Monkey effectively act like their own payment processor, where they're not leaving an extra revenue on the table and also enhancing the services.
Wow, it sounds incredibly important and challenging of a business. Certainly hard to imagine diving in and pitching people on doing that, pitching businesses on changing this. What was the impulse to do this? How did you come across this opportunity?
Yeah, I've been doing payments for countless years right now. Really, the where we started experiencing the pain point was back in 2016. I've personally worked with some of the largest vertical software companies to help them understand this opportunity and to monetize on their payments. And the biggest challenge is when you're a vertically oriented software vendor, you're really good at what you're doing. You really understand that industry, but payment space is an infinitely complex thing for any software vendor to understand and get into. It's a lot of the current solutions or the approaches that they would be forced to take really force them into this heavy lift of a position to now become a payment processor, and not, and lose some of the focus on what they're doing, what they're great at. That's where we really come in. And there's a lot of, we're, very unique for vertical or software companies that are specifically focused on verticals. So that's our specific laser focus right now.
And the verticals, what's unique about verticals? The fact that they have very specific problems, or how do you think about that?
Yeah, so verticals, let's just to put kind of a formulaic definition to what a vertical software company is. It's typically a company that's a B2B2C. So going back with, again, like a MindBody like example, they would be the first B, their small gym may be the second B, and then the gym members would be the C. And typically in that B2B setup, the second B needs to accept payments from the C. So where it's B2B2C, and then the second B needs to accept payments from their consumers or customers. So they are the ones that face this unique situation because they can offer and upsell other services that the small businesses need to, engage in and, obtain anyway from somewhere else. This is different than what may be called a marketplace type of a setup. We don't focus on marketplace type of a setup. Your traditional marketplace like companies could be Postmates, for example, where you go to Postmates and they're effectively reselling you items from the restaurants. They are taking on the payments, then they're turning around and paying the drivers, paying, the restaurants and whatnot. So that's not so much of a vertical software company from our perspective and in our opinion. It's, to us, a vertical software company is somebody that effectively gives you the operating system for your business. And part of that operating system for your business, they also help you, they become your payments provider.
Interesting. So the way it works behind the scenes, say if I open up a gym and I don't know if MindBody works with gyms. I know they work with yoga studios. So the back end payment system that MindBody set up, well, first MindBody has to collect payments from the gym, and I'm sure that they have a
and that's a separate thing.
Thing. But the gym has their own merchant processor, their own bank account. Does MindBody facilitate payments traditionally through that? So when I put my credit card in at the gym to buy a membership, is that hitting like a MindBody merchant account, or that would hit the gym's merchant account?
So it would hit the gym's merchant account in this case, and that's what we're helping them set up. Is so it hits the gym's merchant account, but MindBody is effectively the provider of those payment processing accounts.
So now the way it works is MindBody does MindBody, and we're just using MindBody as an example.
Of course, yeah.
But they would would they say, hey Jim, we have 5 different options for payments, and then you choose what you want? Is that kind of how it works?
Yeah, typically it obviously depends on the size of the small business, the SMB, and the traditional retail rates are what you see on a Square or Stripe, where it ranges between 2.5% to 2.9%, and it's a little bit of a disconnected experience for, in this example, for the gym to have a separate payment processing system, only to get their gym operating system, as an example, the MindBody, to connect to it, to import all that data and whatnot. So MindBody is able to offer the gym a more integrated experience from its, let's say the gym members directly paying from the MindBody app to that specific gym location, or doing card present transactions. But effectively, it's a kind of a win-win-win in the whole chain. If you think about it, there is us as the white label payments provider. There is our partner, in this example, would be a MindBody. And then there's the MindBody's customer, which are the gyms. And then there's the gym's customers, which are the members of the gym.
Got it. Super interesting. And so where are you guys now? Have you raised money? How many people or how many customers, or however you measure progress? I'm curious.
Yeah, I'm really excited to say that we've raised our seed round. We were oversubscribed on our seed round. We were in a fortunate position where we specifically picked VCs that were more heavily invested in in existing vertical software companies. So that way it kind of helps us just build a lot more momentum as a startup with our marketing and outreach activities and whatnot. We are, fully integrated to become, a backbone of a payment processing. There's a lot of compliance. There's a lot of PCI compliance, a lot of just heavy lift technology. So we've cleared through all those phases, and we're now going live with a nice set of accounts.
Yeah. Got it. So you have listed publicly, you raised $2 million. I guess you can call that a Series A or seed round. Doesn't really make any difference, in my view.
Yeah.
And how many people working full time in the company?
We're just under 20 people at the moment.
Cool. And you
Yeah.
mentioned pre-show, but mostly remote or mostly in LA, or are you guys thinking of going totally remote?
Yeah, I'd say the core is in LA currently. We do have offshore development teams that are helping us out, but we are de facto remote right now, just, based on how the world has turned out in
Yeah.
the past 2 years. And we're at this point, it's working for us.
Yeah.
So we do have an office in Santa Monica through one of our VCs, but so we're kind of a hybrid type of a setup.
That's awesome. And your background is in engineering, or were you? I noticed you were a professor at USC prior, or was that
Yeah.
teaching? What were you doing exactly, or what's
I
your
was
background?
teaching advanced iOS development. So I've been in engineering for over 20, 25 years at this point, just doing a lot of deep infrastructure, full stack really, from the mobile application layer to also backend systems. At USC specifically, it was a unique opportunity. I was invited as a guest speaker a couple of times, and then learned that they are looking, to start these advanced iOS development courses for students. So it was something. I'm a Trojan myself. I went to USC for my undergrad and grad school, so it was exciting to be back there and to give something back.
Yeah. Oh, that's cool. How did you choose the tech stack for PayEngine, or what are you guys using now?
So it's a hybrid mix of varying things. We do have kind of by nature of being in the payment space, there's a lot of compliance and high level of SLA, service level type of agreement expectations. So as such, just starting from the deeper infrastructure layer, we are, multi-cloud. So we have kind of failover plans where everything, is being replicated on various cloud providers. We are pretty heavy in Kubernetes and just overall just a modern stack. It's called cloud native type of approach. So that's our infrastructure layer. As far as it goes for our application layer, it's a microservice based type of environment. So depending on the specific microservice, we're using different, trending frameworks for the backend, depending on what fits the bill and the activity. And then we do provide for our own customers all kinds of interfaces that they may have chosen. So, we are with our solution, it's we give everything as embeddable widgets. So, if you're, let's say, a vertical software company, you haven't thought of payments. We effectively, within 1 week, you can be up and running with our system because we don't just, even though we are an API first company, we don't just dump a whole bunch of APIs on you and then you have to go ahead and, from that create your own interfaces and whatnot. But we even give you these white labelable widgets that help you for throughout the whole merchant lifecycle, from the onboarding experience to the transacting experience to even reporting, all the security and everything. So you are completely, as our partner, you're completely sanitized from any kind of security concerns. You don't even touch credit card information, but it all appears like it's being done on your website.
Interesting. Yeah, I like that. Do you take a percentage of what the gym in the previous example, or the second B in the B2B to C, is that the pricing model where it's like a fixed percentage, or how do you guys, what does the pricing model look like?
Yeah, good question. So there's a couple of factors that affect the pricing model. Some of it is depending on what stage you are in as a company. We do have, just from our current set, ranging from really large scale vertical software companies that are processing, over hundreds of millions of dollars, and some that are more startups. And we can offer the solution either as a software as a service, where we figure out what kind of a system you need in place and whatnot, and then let you be in control of your own effectively gateway that we will provide for you. Or we can, if that's not something that fits for the software organization. We can also provide you rev share type of models where we do a rev share. The important thing I think to understand here is that when it comes to the credit card industry, there is something that defines what anybody can make in it, period. And it's called the interchange rates. The interchange rates, just to put a definition to it, it's something that's defined by the credit card networks, and it typically goes to the issuing side of the payment processing. And, it doesn't matter who you are. It doesn't matter if you're Square, Stripe, Apple, Google, Amazon. You can't defy the interchange rates. That's a systematic reflection of the risk on a per specific industry. And really what happens, a lot of these, companies, they play this game of averages on the interchange rate. So it's, let's say an interchange rate may end up at a 1.8%. So when Stripe is selling you a 2.9% flat rate type of a deal, that's the margin opportunity that we bring to vertical software companies.
Oh, so they're basically, the credit card companies are telling software merchants, I guess you'd say payment companies, hey, you can add on whatever you want, but this is our fee. So the interchange
That's what it is. Yeah.
So there's a baseline. It's almost like eventually it kind of converges to that, I'd imagine.
And it depends what kind of a card mix you use and whatnot. So that's what we really, for any kind of a tech company, their TAM, total addressable market, is very important for them. So we really expand that, in that where before they were just kind of this simplistic revenue machines where they just collect fees for their software, we overnight turn them into a fintech company with this solution, because now they're tapping into a margin of their customers. And it becomes very meaningful. While, from that perspective, you may think, it's 1% I'm able to unlock from that customer margin. It becomes meaningful when you compare this to your current take rate on your customers' revenue. Let's say, a Service Titan type of company, their customers are HVAC companies and plumbing companies. So Service Titan, just by going as an example, let's say charges $1,000 a month to their customer, who in turn has a revenue of $100,000 a month. Their take rate on their customer today is 1% of their customer's revenue. By unlocking the payments, we're helping them tap into another 1% potentially, or it varies depending on the industry, of their customers' revenue. So overnight, they can potentially, double or significantly increase their own revenue. So it really moves the needle, in that now you're growing with your customers versus just being this set subscription service.
Interesting. So is the hard part in the sales part of your business, I imagine, the hard part is going to be convincing the vertical software, convincing Service Titan that this is a good idea. It's probably pretty easy, because they'd be excited about, additional forms of revenue. But setting up the sales process to then go and change the way that the HVAC company, the restaurant, the gym, like changing their payment system, is that the hardest part of the sales cycle?
It really varies depending if they're more, if their customer base is more of an e-commerce type of setup versus card present type of environment. Typically, it's easier as an e-commerce because the software vendors already control the interface for that, because the merchants are using the ISVs, the software vendors interface. When it comes to card present, effectively our software vendors are typically their quote unquote point of sale system, because everything's entered in their database. So we offer them a solution to easily integrate with our option of hardwares that we support, and we work with many different hardware vendors. So we're typically able to retrofit whatever solution that may be. Our biggest kind of sales trick is really just educating the ISVs. It's from as far as the opportunity and the benefit perspective, I think that's clear. We're coming in and just offering to unlock more revenue for you.
Wait,
You know,
what's an
we only
ISV?
make money. ISV is an independent software vendor, so it's
Oh,
the vertical software company.
gotcha.
Yeah. So we help the vertical software companies. Effectively, the value proposition is easy because we help them unlock more revenue. And we do it in a unique way. So they don't take on any liability, which there are, obviously it's a big world. There's a lot of options for everything, but we're unique in that with our solution, it's not just the opportunity to make more revenue. It's not just the technology where it makes it easier for you to integrate than anything else, but it's also there is a varying number of things that come as a payment processor that you're required to do. So the way we've structured it is that our customers are vertical software vendors. They don't take on any what's called master merchant record liability. Whereas with other payment facilitation models, if you are MindBody and you decide to extend this to your jam, while you're tapping into the same revenues that I described, you're also kind of the de facto financial liability holder. If one of your gyms does something nefarious, they go bankrupt, they have chargebacks and whatnot. And so we're unique in that sense too, versus other market solutions really just try to shoehorn in this payment facilitation model onto vertical software vendors. If you're Postmates, you can't escape that because you're the merchant. Mm-hmm. If you're Amazon Marketplace, you can't escape that because you're effectively a reseller. You're this big, ginormous merchant that is reselling other people's items. So if I purchase something from Postmates and then that restaurant does something bad, Postmates is responsible to me, not the restaurant. The restaurant is responsible to Postmates. So we keep our vertical software companies completely out of that liability loop.
And are you as in PayEngine the one that the customer will come to, or do you end up taking on that responsibility?
So yeah, great question. So we basically, the process is that we do a lot of the what's known as the know your customer, know your business, anti-money laundering, KYC, KYB, AML checks. And then we provide this information to our underwriters. And we have a network of varying underwriters, and they underwrite it directly. So we're limited in that liability also ourselves.
Interesting. What do you think of this whole world? Like putting PayEngine aside for a second, the whole world of underwriting, and it's like black magic down there where they're just, you feed them some details about a social security number and first name, last name, date of birth, and they run their algorithms. I mean, I guess my question first off is, how well do you understand what's going on under the hood there?
I mean, it's all a risk assessment, I guess. They're, to qualify the risk assessment and whatnot. Ultimately, I think we're going to see a divergence in general in the payment space. And really the split is between, do you have money right now that you want to pay with it, or do you want to pay with a credit? So when, unfortunately, you go down where you want to pay with a credit and pay it at the end of the month or some credit card, whatnot, then you're borrowing somebody else's money. So that's all, you're effectively selling your own background, your own everything, just to get somebody to trust you that you are going to pay them back. But there's interesting movements happening with all these, ACH transactions now. And I'm sure, in not too distant of a future, the varying cryptocurrencies, whatnot, that may become more prevailing. That's when we're going to see interesting things happen with the credit card space, because at that point, again, as long as there is a large dominant, consumer base that needs credit, that needs to pay things on literally a credit card, then we're not going to see any of those background checks or scary things go away, where somebody with your social security number can basically look everything up, and it's something you're already basically consented to giving away like so many times across so many different experiences in life.
Yeah.
But that's where kind of the interesting difference is, whether if you want to transact with effectively cash, your own funds right now, where you don't want somebody else's you don't want to borrow from somebody else to pay for something, then a lot of interesting options are opening up in the space.
Yeah, I can't help but feel there's a little bit of a trick going on that the Visa, MasterCard, Amex are playing, because they end up charging the merchants a fee to use their service, and so everything in 7-Eleven is, you know, 2% more than it has to be because of the credit card, and you end up paying 2% more. You don't notice a difference. I mean, who's going to notice 2% difference across the board? And then you have this credit where I'm curious too your thoughts on this, but why people use credit cards? So is it A, that I'm scared of my debit card being stolen and my money taken from me? Is it B, because I'm literally living paycheck to paycheck where I need that credit to purchase this item? Or is it C, I want the cashback points. I want the 2% back on everything I buy, or whatever it is. Or is there some other reason that people use it?
It's it's a couple of things. One is the concern for the security, like you said. You know, if you use the debit card, and I think the main one is probably just the convenience and the how widely it is accepted what they're doing. It's not like you can walk into a store and pay with ACH. You know, there's a lot of online opportunities that are opening up where you can just do this more secure transfers and do via ACH, whether it's like systems like Venmo or PayPal where the other party never even knows your credit card information or whatnot. It's just a middleman that takes it and transfers it out. But yeah, the credit card companies have been just successful at building out the network for this, you know, the wires into the retail space.
It's crazy. So. It's crazy to me how successful they've been across the world. Like the international expansion is also just mind blowing, and how few credit card companies there are. It's like Visa, Amex. I mean, those two, you could drop me in some random country in a rural area, and likely they would take those. And I guess that's it's just the desire for all of us to be on the same network. Like there's benefits of consolidation, which is probably the driving force behind that, and probably the driving force behind crypto, and like why Bitcoin tends to be the currency that people subscribe to, even though there's, you know, 1,000 other options. I'm so curious to think about how this goes, because like Visa, Amex, they're well aware of crypto. They're investing in crypto companies. They're building out their own crypto products. I wonder if they see a hard pivot coming down the road. Like, are they about to do a Facebook pivot to Meta, where they're like, all right, we're going all in on, you know, Bitcoin, our blockchain technology? Probably not in the short term, but maybe in the medium to long term. I don't know.
Yeah. I think the first place that cryptos will probably break through is international cross-border payments. That's just expensive right now.
Yeah. And
That's
slow.
just really expensive to go. Yeah, and slow. So I think that's once it's a little more stable, that's where I'm expecting we'll see the first breakthrough.
Yeah.
Otherwise, for typical consumer type of payments and merchants, it's just too volatile right now. You may accept crypto and it ends up you sold your product for 50% less than what you wanted to, or vice versa, you know?
Yeah, I agree. And there's not a big driving reason for people, at least in the U.S. You know, with bank accounts are very easy to get. You know, there's great payment options. Everyone has electronic payments, and they're connected to the internet and merchants. So I think that maybe there's some pressure that comes down the line from inflation. Like maybe people don't want to hold U.S. dollar, and therefore they're like, hey, we'll take crypto. I would imagine this is driven both by the merchant and consumers, where the merchant's thinking, hey, I don't want to store, you know, a month's worth of cash in the bank if I can hold it in crypto because of inflation. I mean, that would have to be pretty severe inflation for that pressure to happen on merchants. But I mean, we work a lot with Argentina in my other company, and Argentina is like brutal with inflation, and people down there want to hold the U.S. dollar. Like they want to hold, they desperately love holding a currency that is not their own currency, and opening a bank account in other countries. And so they go, you know, pretty far considering, and like, yeah, it could certainly happen.
any currency, it's just a matter of how many people trust it and say, yeah, this piece of paper, this, Federal Reserve note is what I'm going to value as the actual value of whatever I'm buying. So I think the ultimate question anybody that needs to ask when they're thinking about cryptocurrencies, fast forward 10 years, are more people going to trust it or are less people going to trust it? Or are more people going to kind of be aware of it and get into it? For me, the answer it's the earlier. I think yes. It's kind of becoming this kind of global currency where, with the inflation and everything that's just specific, especially happened in the last 2 years, the way we're just printing money right now, it's not a lot of government-backed currencies. They're going to go through hyperinflation, and then there might, crypto is the only thing that's kind of a globally agreed on, really decentralized system.
Yeah.
Everything else is centralized. Everything else is controlled.
Yeah, it's crazy how the stars align on this. It's like just, being in the US and seeing all these trillions of dollars just get printed. It's like, well, you pay for it somehow. And, if you want to escape the dollar, where do you go? People used to go to gold. They used to go to real estate, or they would buy items. But all that's tough because it's not liquid. Like there was really no other option. And now there's a massive, easily accessible other option, which I think people are quickly starting to realize because the price of crypto has shot up over the recent months. We're recording in November, and I think Bitcoin, it goes up and down a lot, as you say, but it went up a lot in the last few months. And it's like you can see how the combination of the economic factors, for the macroeconomic factors of printing so much money and inflation, combined with the technology that's being developed in the space, the amount of venture capital money and people, that super smart people that are developing this space, and then generally the attitude I sense is one of openness from governments and payment companies alike on the existing infrastructure. Like, tell me if you disagree, but largely, there's definitely cases against this. Largely, the government is not against crypto. I don't know if I could say they're supportive of it, but they're not trying to shut down companies in the U.S. They're not trying to ban citizens from using crypto. Like Coinbase is a publicly traded company. And then on the flip side, there are a ton of people that are diving in and building tools in the space. So I don't know. It's hard to see any other way, in my view, that it grows and becomes more valued in the future.
Yeah, it's certainly oppressive governments have attempted to do it, but definitely I think I haven't seen anything on an aggressive scale. I think the only thing that the government is probably keen on right now is making sure they know what's going on with the transaction. So a company like Coinbase you bring up, as long as their reporting and whatnot is the IRS is mainly able to trace what's going in and what's coming out. They're starting to, in a weird way, they're starting to acknowledge that it is an asset.
Yeah.
By doing that, they're acknowledging it's an asset. They want to know how much you gain, what your capital gains were on it. So
it's super interesting. I think the government taxation is the driving factor, right? Like the government always wants to make money, because if the government doesn't make money, the government doesn't exist. They just lose revenue, and then I think we don't want that really. An individual is certainly incentivized to avoid taxes for their own personal benefit, but if that was a serious whole, like if it was very easy to avoid taxes with crypto, like say you could just walk into a store, pay in crypto, your boss pays you in crypto, you're like, oh, I'm not paying income taxes. The government doesn't pressure me to do it. I'm not going to do it. Then if the government didn't have that pressure, then society would kind of collapse. Like there would be, a lack of funds for social infrastructure. I'm kind of arguing for government, which I rarely do, but it does, it does feel like there's a fine line to walk with how the government comes in and taxes crypto gains and uses. Yeah, I don't know. Do you play much in this space, or do you invest or spend a lot of time?
I do. It's been a on and off thing. I think it's an on thing right now. I even have Ethereum to validator node setup. So it's interesting to watch that. But so not just from an investment perspective, but also from actually just being a hands-on into it, just
Yeah.
to see what the experience of that. At the end of the day, the funny thing is you invest into the not mining rigs, but I guess at this point, this validation rigs and whatnot. But when the market moves, it's like, it's just, it either jumps up and it doesn't matter what you made, or it jumps down and you're committed to the pot. So it's interesting. I'd say definitely, whether you're an investor or an actual operator, it's, you win or lose if you're an investor. As an operator, it's more of just, it balances itself out as far as the rewards.
Yeah. How do you manage this? Like, you're running a funded company, you're a super smart technical guy, you have the traditional rails, which you understand well, and you've got great inroads and the company going in that direction with, going B2B to C, you've got the strategy, and then crypto's over here. I feel like it's almost like you got your wife and then there's this distracting girlfriend over there that's like, like crypto is it's elusive. It's like, do you think about merging them together, or how do you think about budgeting your time on crypto stuff versus?
Yeah, as far as my own personal crypto stuff, I'm fortunate I have my brother that's really glued into this. So if anything, he's just kind of forcing down new information on me where I normally, it's like getting a personal trainer at the gym. You may be beat, you don't want to go to the gym, but once you go there, he gives you his energy and you're just doing that. So I have that relationship with my brother where once a week or whenever some major event happens, he kind of keeps me in line with the crypto things and whatnot. As far as the merging it eventually in the business sense of things, absolutely. We just came back from exhibiting at the Money 2020 show. So it's definitely, it's starting, the buzz is starting to go up. We're not we don't know of a single merchant that's ready to accept crypto or has even thought about it or asked about it, or any payment transactions or any consumers that want to pay with it. But we are starting to see a lot of chatter around this cross-border payments. So I think that's probably going to be the most immediate thing. So if any, that would probably be the angle.
How was Money 2020 with respect to the attention on crypto? Was it was there a lot of talk about this at the conference, or negligible, or what did you notice about?
So it's interesting. A lot of crypto term is blurred with the term blockchain, where blockchain is really just a ledger system. So I want to say there was a lot of blockchain related things that were happening, but not necessarily cryptocurrency in the value. And it's important to differentiate between the two because a lot of people kind of confuse it. But blockchain is just basically a decentralized accounting system. So definitely a lot of talks on blockchains and how to manage kind of transactions and whatnot. So it's just more of a not one party owning it. Again, nothing that really, in my opinion, just hit as the next wave.
Yeah.
It wasn't Money 2020. I'd say the biggest takeaways from it, funny enough, to your earlier point, was this KYC, the Know Your Customer check. So background security tools and whatnot. That's the most prevailing thing right now is just, companies that are helping other financial institutions do a background check and make sure that they're dealing with the right person or what their expectations would be. There's a lot of financial tools that are being kind of neobanked, from just loans, like payday type of loans or equipment financing or factoring. There's all these companies that are coming up that are just more modern. They're more quick to act on things versus the big banks. So naturally, it's interesting to see what other opportunities are born out of industry. So a lot of KYC, a lot of KYB, a lot of tokenization companies that help you sanitize the data and not touch the data. not so much deep on the blockchain or crypto as I would have liked to see.
Yeah. Yeah, I want to ask you about the KYC side of things.
Yeah.
I feel largely that this desire to track people, filter people, screen people has come from the 9/11 Patriot Act. I wasn't really, I didn't have much of a brain prior to 2001. I was maybe 12 years old. I was born in 87, so yeah, 14 years old. So certainly not in payments at all. But prior to that, it seemed like it was a different world with respect to how companies were required to screen their customers. Is the attitude, I guess, from the people who have control over this, that it's still on anti-terrorism? I mean, is that generally why we're going to all this effort to screen candidates? Or, yeah, I guess anti-terrorism, taxes, guns, sex trafficking. I mean, those are kind of the motivating factors because there's a lot of cost in this. You know, every company being required to check every customer in detail. I saw some stat. It's like, I interviewed somebody who was building a compliance company a couple shows ago, and she was saying that the average crypto exchange spends something like 15 hours total in their screening of somebody to get them to a pro account. And it's like, that's super costly. You know, that's got to be in the billions of dollars and time spent. I don't know. Do you have a thought as to whether this is legitimate, whether it's useful time, and like it's a tax on the whole industry? And I just question it sometimes.
Yeah, it's definitely a tax on the whole industry. I think it's at this point it's kind of the snowball effect, whether that the Patriot Act was the one that kind of set this off. There's all these compliance and consortiums that build around that, where they like to, create their own rules and regulations, and then they're good at instilling fear and creating, all the different cases why somebody needs to do all of that. And then there's all these companies being born that are now monetizing from the KYC, from all this compliance and whatnot. There's like, more than anything, it's just a wave of compliance companies. So anybody getting into this space is just drowning in compliance. But I think at the same time, that's kind of like converging with how our entire world is becoming so digitized, where we are just being easily, as like our backgrounds are just a lot more easily accessible and whatnot. So it's kind of like a race. It's like on one end, there is this snowball that can't get stopped anymore because, it's already set, and there's so many businesses around it that they lobby to these other, to PCI compliance to stricten their rules, because it takes you like, 50, 100 grand to just become PCI compliant per year, at least. And then there's technologies that are coming out that are trying to optimize that for other companies. So do we need it under the hood? I guess it's all, everything operates on the risk factor. So, any business like giving out the loan is operating on that risk factor. I think it's a little too heavy, to be honest, but I don't see it stopping.
Yeah.
The only way that it may stop is, again, I think cryptos may be the biggest threat to it, where you're like actually just transferring digital data, and there is no regulatory body other than just the network effect itself.
Yeah, I agree with you. I think it carries a lot of the same attitude of what I see in medicine and healthcare, where it's like if you have a say, I don't know what percentage. I think there's something like 30% of Americans are obese, or maybe like 25, but it's a really high number. And when you think about that, the Western medicine reaction is like, let's fix the problem. Like they have a hip, displaced hip, so let's give them a hip replacement. They're in pain, let's prescribe them opioids. They have high cholesterol, let's give them this medication. High blood pressure, this medication. And it's like, well, you're technically you are solving a problem, but you're solving it downstream. And I feel largely that the same thing is going on in payments with KYC and AML and all these things. It's like what are we trying to do? We're trying to stop people from doing things that abuse another person in some way. They've caused them physical harm. Physical harm is ultimately what it's all about. I guess mental harm in some ways. But ultimately, we're trying to stop people from doing things that we don't want them to do collectively using the payment rails. And if you can stop payments, you can stop people from doing them. Makes sense, but it also doesn't address the fact of like, why would someone be sex trafficking? Why is 20% of the 25% of the country obese in the first place? And I think that for whatever reason, there's not. It's like capitalism is kind of incentivized to have problems because then there's something to fix and solve. If there wasn't any problems, like what the hell would we do? So I think in many ways, I push us to become aware of the fact that there is stuff to do if we solve problems. Like if we're all healthy, if we're all in good mental shape, there'll be a lot of companies that will have to pivot. Like all the mental health companies, all the drug companies, like things will have to change. You know, if no one was committing terrorist acts, no one was sex trafficking, the need for AML would like shrink, right? But that would be a great thing. We should all celebrate from that. But then it's like, well, what do all the guys who are trained in AML, what are they going to do? And I think it's, it's got to be an attitude of like, there'll always be another thing that we can do. We're never going to run out of problems in the human race. So.
Yeah, it's a circular loop, even the businesses, like we're fortunate enough to be able to be backed by, top VCs where we can afford it, but it really stumps innovation because a startup can't just become, really revolutionize payments. They can't even, it's barriers to entry for them is just insane. So it's, I'm sure a lot of these companies are happy that there are barriers to entry. It's like, the large corporations being pro high taxation is because smaller guys can't afford to pay those taxes, where the big ones, it's an easy barrier to entry. So it's an infinitely complex world we're in. And everything that may appears chaotic and weird, like that happens, but it's really, there is some kind of an angle that is being pushed, and there is certain benefactors of that angle whenever you feel like something doesn't make sense, but it's still being pushed.
Yeah,
so.
You said it well with the game. It's like there's a game going on, and I think it's super helpful to understand the game. It's like there's the game of the centralized, government-driven AML world, and that's just going to keep the compliance world, and that's going to keep growing. And then there's the people's desire to not be tracked, and that goes the other direction. So I find it's really helpful to understand these like meta trends, either to see individual opportunities or just have a sense of what's going on in the world and knowing what to support, what to believe. Like, okay, there's a new tax bill that comes out or a new regulation that wants to keep everyone's identity tracked on a blockchain, and the government has access to it. It's like, do you support that or not? You could make the argument that, it's safer. There's multiple arguments, and I think increasing the sophistication of people's perception as to what's going on is like the most important thing to prevent us from sliding into chaos or, a place we don't want to be.
Absolutely.
So thanks for being willing to go down the rabbit hole with me. I appreciate your thoughts on it. It's interesting to hear, from your perspective, coming at it from like in the trenches, building out these systems, to have those thoughts.
Yeah, thank you. This has been I've enjoyed it.
Yeah.
So
I love your progress, man. So PayEngine, I guess you guys would be looking for customers now, the vertically aligned software companies?
Yeah, anybody that's in this vertical, they're called vertical software as a service type of company, would benefit from our system.
Yeah. And I want to ask you one last question. You went through Mucker Capital, Mucker Labs. Did you go through the program in LA and work with the team there?
Yes. Mucker is... it's an incredible experience. I really, I don't look at them as investors. Yeah. They're like a family to me. And I'm not just saying this for any other reason other than just that's the reality. Specifically, the founders are incredibly involved with the companies. They themselves have an operator mindset. So, there's times where we've been blocked from sending out emails or something like that. And I'm like, how am I going to tell them our domain name just got blocked? And they're like very just, encouraging. They're like, good, that means you're making progress. You're not that they encourage you to do anything bad, but it's just they understand how startups work. And their entire program isn't just kind of detached from give us your slide decks and financials and projections, whatnot, but it's just more of a real tactical type of approach. And a lot of times they are involved in streaming these opportunities to their own companies and really connecting the dots for their companies because they have such a grand view, 30,000, foot view of everything that's going on. So it's, I can't imagine doing, what I've been doing without Mucker.
Wow. And did you go in with the idea or did you go in cold and had the idea in-house with Mucker?
So yeah, the idea origins are an interesting thing because, as I said, since early, like mid last year, 2016, 2017-ish era, I've been helping other companies on a consulting type of basis bring their payment system up to speed. Namely one of the large ones was a Mucker company, so it was really just a light bulb that went on between myself and one of the Mucker founders, Will Sue, and one of the other company founders from Mucker that, hey, this is a real pain point. A lot of the solutions out there are trying to shoehorn in things that are not specific for vertical software companies. Let's productize what it is that we've been struggling with, and it's been a painful thing because it literally opens up a new revenue opportunity for any vertical software. And that's big when they're trying to raise funds, when they're trying to constantly grow. This kind of puts it on an autopilot because even if you don't grow so much with your own customer base, as long as your customers are growing, then you're growing with them. Your revenues are growing with them.
That's a good point. Yeah. Yeah. I'm an advisor to Mucker Labs and have.
Oh, really?
Yeah.
Okay.
And
who do you work with?
A couple of companies in their portfolio. I'm on the board of Fix My Car. Clarity is one of them. I know like probably 10 companies that went through Mucker at this point. And overall,
that's awesome.
Big fan of what they're doing. Yeah. It's kind of like a hybrid. It feels like a soft program in terms of the start-stop. They're more of a, I guess, incubator rather than like a strict deadline like YC, where they're like, we start in this state, we end in this state, we shove you through the process, and then you raise money.
That's exactly that. Yeah. Now, Will and Eric, they're just incredible. Like it's, I work closer with Will on this specific project, and to me, I view him as like a big brother. Like it's like I don't go to him to say what I'm doing well in. I go to him with the problems because he knows how to solve the problems right away.
Yeah.
So
and they were part of the round that you did, the seed round.
They were part of the seed
awesome.
round.
Cool, man. Yeah. So shout out. We did got a little plug for Mucker Labs, which I'm stoked about.
Right.
And best of luck to you, Spartak. Congrats on all the progress, man. And we'll hope to hear from you soon.
Thank you, Mike. Have a good weekend.